I've seen very profitable businesses with messy financials. It just drives the price down.
Hello, my name is Dana Stetson. I'm your business broker. Many times when I first meet the seller of a business, I ask for the last 3 years of tax returns, profit and loss statements, and a balance sheet. Then I get a blank look as the business owner has been 100% focused on running the business and not managing the financials of the business. To discuss how to avoid financial pitfalls and maximize the best possible outcome when it comes time to value your business and then sell it, I've invited Shelly Blaufeux to discuss her experience as a CPA and business advisor. Shelly, please briefly introduce yourself and your firm.
Hello, I'm Shelly Blaufeux. I'm your outsourced finance advisor. I've been practicing as a CPA for over 25 years. I founded Continuum Small Business Accountants in early 2019. And we are a CPA firm based in Lower Westchester in Larchmont. And we serve, like I said, as your outsourced finance department. We work with small to medium-sized businesses. We basically provide under one team your CFO level strategy, tax support all year long, and stellar books so that your books are always current. And we provide that all under one monthly fee, and it ends up being a lot more cost effective than hiring someone in-house. So our sweet spot is when your business owner has outgrown just having their bookkeeper, but they're not really ready or able yet to hire someone in-house. That's where we come in. So we're your financial partner all year long, not just a tax season.
Well, that's wonderful. I wish more of my sellers had contracted with your business prior to getting ready to sell it. So what do you think differentiates your firm from other accounting firms and firms like yourself?
So first of all, when we meet and onboard our clients, we get to hear all their pain points, their frustrations. We get to learn their systems. And that is sort of different than when you've got your bookkeeper providing one service that doesn't always communicate with the CPA firm. So both your books, your strategy, and your taxes are all under one roof. We also have, our invoicing is not like your traditional firm. You get your bill when your taxes are done, or you get on a call with your CPA and there's this surprise bill. Our owner business package is basically a monthly fee, and there are no surprises. We're accessible to you 24/7. We're part of your team. No invoicing. You always know what you've signed up for. One last thing is that we specialize in small businesses. We don't have a wide variety of clients like not-for-profits, high net worth individuals. Well, our owners, some of our owners are obviously high net worth individuals, but we only take on small business owners. So that's our specialty.
Well, that's wonderful. So you mentioned tax a couple times. What is tax accounting? How would you define that? How do you look at that?
Tax accounting is basically doing your books and your financial statements with the taxes in mind. If you've got separate service providers, the bookkeeper and the CPA don't always communicate. So we're always in your books. We know if there's a large equipment purchase. We know if there's new hires. We're always doing your books with the tax deductions and the tax implications in mind all year long.
Can't tell you how many times I've seen this where I get the 2025 tax return, I have the 2025 P&Ls, and they really don't match up and tick and tie. And when I present this to a buyer or the buyer's financial advisor, they have a lot of problems with that. And oftentimes the seller doesn't even know what went on between these two parties. That would be fantastic if more of my seller business owners would have done that in advance versus being kind of caught up at the end. So what are the most common financial mistakes you see done by small businesses financially?
I would say that the number one thing would be the commingling of personal and business expenses. That creates a bookkeeping mess that's very expensive and very time-consuming to untangle. You want to make sure that your books do not commingle and don't mix business and personal. What we do, because we get to know the business in and out, we make sure that those personal expenses, we will just categorize them as an owner distribution. but they can't be deducted. And the reason you don't want them there is that if, God forbid, the IRS ever questions or examines the books, having personal expenses on the books becomes pretty clear to them pretty quickly. You want those books to be stellar. What we always recommend, we actually insist, and it sounds really obvious, more to new business owners, is have a business credit card, have a business bank account, pay your credit card balances with your business bank account. It sounds obvious, but I can't tell you how many times we see this commingling, and it's just not a great idea.
And what's worse, I see this all the time where, let's take truck or auto expense, right? So they do have a truck for the business, and then maybe it's a husband-wife team, and they both expense their cars, not necessary for the business. All of a sudden, I have this lump sum of $50,000 for 20, 25 years for truck or auto expense. And I know most of it is a personal expense. Most of it's not necessary to run the business and should go basically to the value of the new buyer, because as you look at that and say, well, maybe I continue to do that, or maybe I choose not to. But at the end of the day, that's value to the buyer that's being hidden by, this commingling of one line item even.
Mm-hmm. Yep.
So maybe expand this a little bit more. So your point of view on clean financials, how important is that generally in trying to sell a business?
Your financials are everything. Not only are they so critical when the buyers are looking at them, they're gonna go through those financials for at least 3 years with a magnifying glass. But they're the foundation for your business. So the books are everything. They drive tax strategy. They also protect you from any IRS examinations. And especially when you're ready to sell your business, you want to make sure that there are no inconsistencies, like you spoke earlier, between the books and the tax return. The buyer's accountant is going to look through all that. What's going to happen if I've seen very profitable businesses with messy financials, it just drives the price down. It's room for negotiation. The books are just the value driver for the entire transaction. They don't want to see red flags.
Yeah, and actually what it does too is it really undermines the confidence of the buyer and that seller. I try my best personally to find these things before they happen. I don't get them all. And sometimes they find something that I didn't figure out in advance, and it really undermines the credibility of the seller. And then to your point, it undermines maybe the selling price at the end because they're now questioning everything. Okay, a new topic. What should business owners do to prepare to sell their business from a financial perspective, say 2 or 3 years prior?
Well, one thing is going to be your tax structure. That's, I guess, part of my expertise is I know the tax law very well. I've been practicing tax for a long time. So the tax structure of the deal, whether we're going to be looking at an asset sale, whether we're going to be looking at a stock sale, whether we're going to do an installment sale. With an asset sale, for example, the buyers typically want the asset sale because they want they're going to get those depreciation deductions. The seller is going to really want the stock sale, so they get a better tax result. Now, there are tax selections that you can make, and that's where we can make in, where we can kind of get best of both worlds. With an installment sale, again, there's pluses and minuses to everything. You got to run the numbers. That's the key. Go through, does the seller want to get all the cash up front? Is he willing to maybe take the cash over a few years, which can be risky because we never know what's going to happen down the road. But then your taxability goes down. The capital gain is going to be realized over a few years versus one big hit in 1 year. So those are certainly things you want to look at. We try to talk to the owner about that owner dependence. I always say with a business, I run my own business myself, is the owner working on the business or is the owner working in the business? When the owner's working in the business, that's also gonna bring a little bit of a discount because the buyer always wants to make sure that the continuity, are we still gonna have those earnings? Are we still gonna have the profitability when the owner is gone? Are the referrals coming in all from the owner, or is there staff? Is there a team that's handling some of those of the work? That will certainly help. Looking at the different categories of revenue is important. Looking at the customer base, right? Is the buyer, are the buyers customers, are they one client heavy? So for example, if 50% of the revenue is coming from one customer, that's gonna not, you want to diversify your customer base.
Absolutely.
You want to look at receivables. Are there a lot of receivables on the books? That's also super important. From a book perspective, why are we not collecting those receivables? Are some receivables over 30 days? Yeah, so those things, owner dependency can bring prices down. Crappy books can bring the value down.
Okay, so what are the top 2 or 3 things a buyer looks for in the financials when they're reviewing the financials of a seller's business?
I think they're definitely looking for consistency. They're looking at the profitability, whether that's consistent. Is the revenue going up? What do the gross margins look like? Are the gross margins increasing? Is the bottom line increasing? They're just looking at trends for sure.
So, Shelly, any final thoughts on proper financial stewardship of a seller for their business?
And when you say financial steward?
Well, just like in terms of managing the business, what they should be doing from a financial perspective. So what would be some things? Here's the problem, is your typical seller of a business is focused on the day-to-day operations of the business, meeting the clients and so forth. But they're really oftentimes not thinking about the financials at all. Most times when I engage with a seller and I get their P&Ls, their balance sheet, and their tax returns, they don't even know what I'm talking about when I ask them questions about it. Like, for example, today there was a retained earnings element and a balance sheet, and the seller had no idea what that was or why it was there. So anyway, so proper financial stewardship is what should sellers be like, maybe spend 2 to 4% of their time on the financials versus 0% of their time.
Well, that's where we come in. I kind of look at us as the business owner's personal trainer. We kind of force them into it. You won't believe it, but sometimes it's hard to look at your financials. A lot of times they purposely are looking into it, and we make it easier for them because we're in those books every day. There's no tax surprises, so because we're in the books all the time, we meet with our clients and go over their tax liabilities sometime in November, December. There's no reason why the owner should know their tax liability in April, right? We're doing those tax projections, and that's when we're doing the tax planning, talking about retirement plans, health insurance, and all that. But I think a lot of times business owners are just scared, and they just need that partner to help them understand what those numbers mean. And you're reminding me with this conversation about the owner that's running their business based on the cash balance,
right,
in the business. No, you can't run your business based on the cash balance. You got to look at your financials. You can't strategize. There's no tax planning. There's no CFO work. There's no way to figure out the future without forcing that owner to look at the numbers. How did they say the devil's in the detail?
Yeah.
But yeah, that's why I think we have a job, is I think that owners should stick with what they do best, and that's run their business. Let us take care of the numbers. We're experts. So
well, that's beautiful. So Shelly, thank you so much for your insight. I learned a lot on this meeting today as well. And I think a lot of my sellers and future sellers would benefit from your services. Again, my name is Dana Stetson, and I'm your business broker.